Well, good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Hormaz Fatakia. Hormaz, good afternoon. It's another session where the headline indices, all of them are in the red. But as far as the broader end of the markets are concerned, quite a lot of action and advanced decline ratio is not as bad as the headline indices suggest. So overall, and a bit of a recovery from the intraday lows as well.
Neither here nor there, if you can call it that, Vivek, because the bulls would want to end the week on a high. We are heading towards the final couple of hours of this trading week. It's the first week of 2025, first three sessions. The Nifty made a low. The bulls, the good part though is that the bulls have managed to defend 24,000. We'll get to that in just a bit, but these are the headlines that we are tracking at 1:30 this afternoon. The stocks have drifted lower but are off to the lows of the day ahead of the weekend, and after heady gains on Thursday, consumer durables and oil and gas eke out gains, but IT and Realty are the big drags. Mid caps are relatively outperforming.
The government has asked GAIL and ONGC to allocate LPG shrinkage to CGDs in a phased manner. IGL, Gujarat Gas and Mahanagar climb on this news.
Avenue Supermart's own D-Mart reports third quarter sales ahead of estimates fueled by a higher than expected store count addition. The stock surges, but some analysts remain wary of the quick commerce challenge.
Vocard surges nearly 6% after the CDSCO approves a new generation oral antibiotic for the treatment of community-acquired bacterial pneumonia. The management tells CNBC-TV18 they expect 65-70% market share over the next 4 to 5 years for this drug.
Bank of Maharashtra shares have rallied over 6% following its third quarter business update. Deposit growth may be weak sequentially, but loan growth remains robust. The stock has also seen a block deal in the last few minutes.
Well, good afternoon. Like we mentioned, the benchmark indices or the headline indices are quite muted in the session. The Nifty, down almost 89 points, down 0.4%. The Bank Nifty too seeing a bit of correction. A couple of MNC brokerages have gone ahead and treaded caution as far as the entire banking pack is concerned. CLSA removing HDFC Bank from its model portfolio, trimming its weight over there. And so on the back of that, you've seen a bit of correction even in the banking index today. The private bank, as you can see, down 0.5%. But the broader end of the markets, advanced decline ratio is a lot better over there. And individual stocks, individual sectors, especially the oil and gas pack, have been heavy on the news flow in the last couple of trading sessions. That is where quite a lot of action lies. But this is the show Midcap Radar, and this is our special segment Midcap Walls. Upasana standing by the wall to take us to the midcaps that are moving around in the session.
Well, certainly. First up, let us look at the top gainers in today's trading session. First up is Oil India. It's up nearly about 5%. Mind you that the stock has seen the highest gain in the last 3 months. Followed by Bharat Dynamics, the stock is up nearly about 3%. Hutco is also up about 2%. Followed by IRDA, which is nearly up about 2%. And lastly, Jubilant Foodworks is also up nearly about 1%. And mind you that the shares of Jubilant Foods have hit a 3-year high and it continues to remain at its 52-week high levels. Now, next up is top losers for today. Kalyan Jewellers tops the list with a 3% downtick, followed by HDFC AMC, Lupin down about 1.5%, Aurobindo Pharma down about 2%, and lastly Godrej Properties, which also saw a fall of nearly about 2.3%. Now, let us look at the volume buzzers for today. Vodafone Idea continues to top the list for the third trading session, followed by Yes Bank, which has seen an uptick of 2.4%, followed by Suzlon Energy. The stock is down nearly about 1.4%. IRB Infra, the stock is nearly 1% up. And lastly, NMDC, the stock is nearly at a 1% gain levels. Now, let us look at the top news makers for today. First up is IGL, which is certainly the stock of the day as well. It's up nearly about 6% as Oil Ministry has asked GAIL and ONGC to divert gas to city gas companies. And IGL is likely to get the highest allocation owing to the higher market share as compared to other CGD players. Now, Bank of Maharashtra also in focus as company has come up with this Q3 operational update. The deposit growth is weak, but the loan growth continues to remain robust. Hence, we can see an uptick of nearly about 6.3% on this stock. And lastly, Hindustan Zinc also in focus on back of its operational updates. The mined metal production is down about 2% on a Y-on-Y basis, but the stock is up nearly about 4% in today's trading session.
Pasna, thanks a lot for that. The good part of today's session is that even though we are down about 100 points, the Nifty is still managing to hold on to 24,000. That is the big level to watch out for on the index. At around about noon, we went down to that level of 24,000, 24,003, 24,005 was the intraday low. And since then, we've had a bit of a bounce from those levels. What next for the index? Aditya Agarwala of Invest for Edu is joining in for a quick chart check. Aditya, good afternoon. Thank you for joining in. Does this remain a buy on dips market now above 24,000? Does the Nifty? What's the chart suggesting? And what are your stock recommendations this afternoon?
Hi, good afternoon. Thanks for the show. It's the Bank Nifty which is dragging the most, which is a bit concerning at the moment. I'm not too perturbed about the fact that Nifty is down about 100 points. Actually, if you take a look at the internals of the Nifty, Reliance is almost at a day's high, which is a healthy sign. Finally, some participation from Reliance. And if that happens, maybe Nifty might just hold ground and hold on to for 24,000. From there, we can see a bit of a bounce back. And then again, 24,300, 400 is something that can be seen. I am not extremely bullish on the market. I think the volatility will remain. But yes, I don't see a sell-off as well, especially on the Nifty. Coming back to my take on Bank Nifty, which I was talking about, so 51,100 is something that I'm eyeing very closely, between 51,000 about 51,100. That happens to be a major support area for the Bank Nifty. And if that is held, then there could be again about a short covering rally in the Bank Nifty as well. Can take the Bank Nifty back to levels of 52,000. But at current levels, I'll be more cautious on the Bank Nifty as compared to the Nifty. Nifty for me, it seems fine. And if Reliance, like I mentioned, continues to outperform, and we have certain kind of outperformance from the large cap IT names as well in the next week, maybe you can see Nifty back to its feet close to about 24,400 on the upside. Having said that, the couple of stock recommendations that I have are on the long side. One is from the auto pack, which clearly stands out for me today, is Tata Motors. After a good consolidation, stock had corrected significantly, almost it formed a good consolidation base. Now at current levels, it does look like there is a good outperformance that we can see in that stock. So at current levels, I'll be a buyer for a target of 850 on the upside, with a stop loss at 770 on the downside. It's more of a positional trade, so one should clearly look at buying at current levels. Even on declines, one can look at adding Tata Motors. The second stock is Policy Bazaar. Again, a very strong looking chart setup, continues to make higher highs, higher lows, almost on the verge of breaking out into an all-time high territory again. So at current levels, I'll be a buyer in Policy Bazaar for a target of 2,400 on the upside, with a stop loss at 2,160 on the downside.
Thanks so much, Aditya. You've told us about the index levels. You've given us your stock picks. Thank you very much. Let's now take a short break. On the other side, we'll be joined by Probal Sen of ICICI Securities to discuss various regulatory changes that happened in the energy sector.
Back with us here on Midcap Radar, the Nifty continues to remain where it is, around about that 24,100 mark. But there are plenty of other movers in the broader markets, and ITI is one of them. It's now surged to the highest point of the day, 19% higher for the PSU stock. But mind you, it has barely any float in the market because 90% is still owned by the government. So 452 on ITI, a low float PSU, 19% higher there. Bank of Maharashtra is doing well though after its business update. You just mentioned there was a block deal also that took place in the stock recently, 6.5% higher on Bank of Maharashtra. And the oil explorers, the upstream companies, ONGC and Oil India, 6% higher each after the move in crude oil prices. And of course, Oil India being the best PSU performer in 2024 is building onto those gains. But similar stock, oil and gas linked name not having a very good day yesterday was Petronet LNG after the reports, the note that came in from the PNGRB, Citi also having a sell recommendation on the stock. A couple of brokerages have come out this morning. They've shared their views about some key triggers that lie ahead for the company. They're projecting upsides of anywhere between 15 to 18%, be it JP Morgan or be it Morgan Stanley. Both of them have price targets of anywhere between 380 rupees to 400 rupees on the stock. But what is in store for the sector as a whole? We've been joined by Probal Sen, who's the energy analyst at ICICI Securities, who's joining in now. Probal, good afternoon. Thank you so much for joining in. Wishing you and your team a very happy new year. I'll start off with Petronet first up, because that's been the stock that has been in focus yesterday. Even today, a lot of these analysts who come in have said that the regulatory concerns are overdone. Some of them have said that this tariff imposition overall may not bode well for the company going forward. Which side do you lie on? Do you think that these regulatory concerns are overdone, or does Petronet have some headwinds in store going forward?
No, I think first of all, what the company has said, I think is relevant in the sense that their tariffs are still extremely competitive with the tariffs of any other terminal, if you really look at it. I think fundamentally speaking, a company's margins or tariffs that they are charging should be perhaps looked at in the context of what the competition is doing. When a sector, which is what the LNG sector is today, is not really regulated, then I think it's a bit premature to comment on whether the return ratios are adequate or too high or too low. What the PNGRB has stated in the proposal paper is, I think, a call for bringing LNG terminals within the regulatory framework, in which, of course, if and when that happens, they're perfectly within their rights to then look at the return ratios being made, create a regulatory framework for whatever they think is an appropriate return, as far as tariff fixation is concerned. But as of now, I think what the bottom line is that PLNG's tariffs are extremely competitive, even with the 5% escalation, because of course, the first mover advantage that they have. And they are perfectly within their rights, I would think, to sort of exercise that their tariffs, today between 57 to 60 rupees are still well within, the range of what any other terminal is charging in the country today. So, firstly speaking, on an absolute level, I don't think there is any way to say that the tariffs are too high or too low. Secondly, as far as regulation is concerned, frankly, it's anybody's view in terms of whether regulation should be brought in on now or not. It's a decision best left to the government and the PNGRB in terms of what needs and does not need to be regulated. I wouldn't want to comment too much on that. As of now, what one can say is that if regulations have to be brought in, then it's a fairly long-drawn process because it's an amendment to the Act itself. Currently, the PNGRB Act does not really have any provisions for the regulation of LNG terminals. So if it has to be done, I think it's something that will be a long-drawn process, will involve several deliberations, public consultation, and so on and so forth. So that's something that doesn't really look like a threat as of now to Petronet LNG.
Prabal, thank you so much. So one thing that's very clear is that regulating LNG terminals or its tariff currently does not fall under the purview of the PNGRB. Now, however, what we want to understand from you is, have you done any sensitivity analysis in terms of, in case it does come under the purview of PNGRB, we understand it's still a time away, what could be the impact as far as Petronet's earnings are concerned, number one. And number two, what is it that you are suggesting to clients currently? What is it that they should be doing with Petronet LNG if you have it under your coverage?
We do have it under coverage. We actually have a sell call on Petronet LNG, but that's not related really to the regulations. We have had a long-standing concern about the capital allocation, specifically in the petrochemical segment, that they are basically going ahead and doing. We do believe that given where the cycle is, and the kind of capex that has been announced for the kind of capacity that is being added, Petronet would struggle to make reasonable returns from the 17,000 crore plus petrochemical project that they're setting up. So we've had a negative call on the company, primarily on the thesis that while the core business can continue to do well, we are very bullish on the gas consumption prospects in the country over the next 3 to 5 years. And given the state of domestic supply, very clearly LNG requirements will continue to go up by a significant amount. And therefore, Petronet, as I said, with its competitive tariffs and its higher capacity at Dahej, plus with the Kochi connectivity also improving over the next couple of years with the final leg of connectivity coming through, I think the core business will continue to do fairly well. And therefore, earnings will probably still be robust. But from a slightly longer term perspective, I think the balance sheet strength can actually become an issue and the return ratios can become an issue. That's where our slight, skepticism comes from a valuation. To answer your second question, as far as sensitivity is concerned, it's a very straight cut thing, given that there's no correlation of expense. If tariff is cut by 10%, there's a clear 7 to 8% cut in earnings as well. That can actually happen. and similarly, if Kochi tariffs are cut, of course, given the lower contribution, there a 10% cut hardly translates to a 1 to 2% hit on the EPS estimates as of now.
Understood that, Probal. So we've covered Petronet LNG, but there's a very interesting document that's also coming from the government or the MOPNG regarding gas allocation to the CGDs, both all three of them, in fact, IGL, MGL, as well as Gujarat Gas. First up, explain the document to us, and does this take away all of the worries that the companies faced in October and November when there was a significant cut as far as the APM gas allocation was concerned?
Okay, let me first clarify that, the document obviously speaks only in terms of the additional gas, allocation. What seems to have happened from what our understanding is that the internal consumption that is happening for the LPG and LHC segment for both the companies, where they take rich gas, extract C2, C3 and use it to manufacture LPG. As of now, given that that was also a priority segment, the entirety of that gas was priced at the APM gas price, which is what, $6.50. What the government seems to have done, based on what little we can make out from the document, is basically treated this consumption also as a gas consumer. And therefore, in terms of, the consumption of gas, there seems to be stating that you also have to sort of pay market price for a portion of this gas, similar to what the CGDs are now doing with the cut in the APM gas. That is what has led basically in effect to switch about 1.3 MMSCMD of gas from the internal consumption basket to the APM pool, from what we can make out. And of course, it's a positive. It does not take off all of the worries, because the quantum of gas that has been cut over October and November is closer to about 6 MMSCMD from what we understand, between 6 to 6.5. But it does restore about 20% or so of the cut that has happened with this 1.3 MMSCMD plus reallocation. And therefore, the requirement for price increase by the three companies, which are under our coverage, goes down from basically between 8 to 10 rupees to maybe about 6.5 to 7 rupees, of which, of course, they have already taken partial price hikes. So I would say that it sort of alleviates the pressure to a certain extent. It doesn't take away all of it, but it definitely is a relief from a gas cost perspective, to the extent of around, depending on which player and how much gets allocated, between 1.5 to 1.7 rupees per SCM.
Understood that. So now, they don't need any more price hikes, is what we understand. Probal, also your view on ONGC is one of the top gainers today. One of the brokers has written that, the correction that ONGC saw was overdone. Any view that you could give us on ONGC?
We've had a positive call on both ONGC and Oil India for some time. We certainly believe that if the production increase, as has been spoken about by the companies over the last couple of years, if the production increase specifically from the KG Basin comes through, I think the stock should continue to do well. Specifically from a consolidated perspective, HPCL's improving earnings should also provide a big trigger from a group earnings perspective, but from a core earnings as well. Given that net realizations are holding on at around $75 for oil, gas realization should continue to go up now that this new policy has come through, where the incremental gas production from existing fields will all be eligible for at least a 20% premium over the APM formula. That should certainly help realizations also continue to improve over the next 3 to 5 years. So the only monitorable is, of course, the execution of production increase. If there are any hiccups or any more delays in terms of the ramp up from KG, I think that can probably be a negative. But other than that, I think fundamentally, the valuations are also at very comfortable levels. So the stock should continue to outperform even from here.
Indeed, and outperform as it has as Oil India. Probal, thank you so much for joining in today, sharing your views on the entire gamut of oil and gas, be it Petronet, be it the city gas players, and even the upstream explorers and the OMCs. That was Probal Sen of ICICI Securities. Time for a short break, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app, where you can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app now from the Apple Store or the Google Play Store right away. Welcome back. Some more pressure now on the index. It's back meandering down towards the lows of the day. Yet again, 24,070 is where the index is right now. And some of the capital market linked names are not doing very well for themselves. Angel One is down 3.5% as we speak. Some profit booking is also coming in shares of Zomato. That is down 2.5%. And Nalco, as Nigel was just mentioning, the only metal stock that is not doing well, while on the flip side, most of its peers like Vedanta, Hindustan Zinc, all of them are trading at the highest point of the day. But business updates are continuing thick and fast. One of those was from Gujarat Pipavav Ports. Vivek, how were those numbers?
Well, Gujarat Pipavav Ports, along with other port companies, have actually gone ahead and shown what is essentially a slightly muted quarter in terms of operational updates that come in. So the company's containers handle stood at close to 177,000 TEUs, which is 20-foot equivalent, or the units that is used to measure the volumes over there, is down almost 13% on a year-on-year basis. The dry bulk volumes is down 4% on a year-on-year basis. The liquid handling volumes of a slightly lower base is up close to 22% on a year-on-year basis, and the RoRo, the roll-on roll-off volumes, is done very well. It's up almost 52% on a year-on-year basis. Now, the containers handled on the train, again, that is down 15.5 to almost 16% down. So overall, a slightly muted operational update coming in from Gujarat Pipavav Port, and it'll be interesting to see whether the company gives some commentary in terms of after the Q3 results come in, whether there could be a bump up or a recovery as far as Q4 is concerned. Q3 appears to be slightly muted.
Q3 appears to be slightly muted there, Vivek. Thank you for that. Before we call time on this edition of Midcap Radar, just wanted to highlight ITC. That stock too is nearing the lows of the day, and today, mind you, is the last day before the record date for its hotels business demerger, the record date which is on the 6th of January, which is the upcoming Monday. And before that, ITC shares are down 1.5% at the lowest point of the day at 481. With that, it's a wrap on this edition of Midcap Radar. But you would have plenty of queries with regards to the markets. Winnie will join us on the other side with the panel of experts with your stocks. Stay tuned.